And now turning to the topic of the evening, the economics of uncertainty. I think you've all seen the program, but I'll just briefly introduce our panellists. To my immediate right is Dr. Birgit Hansel, the World Bank Country Manager for Thailand. Next to her is Dr. Bandit Nijathawan, who is visiting professor at Hitotsubashi University in Tokyo and former Deputy Governor of the Bank of Thailand, as well as former President and CEO of the Institute of Directors in Thailand. So there's few people who are as well qualified to give a broad sweeping take on everything from the corporate community to macroeconomic and monetary policy than Dr. Bandit. Next to him is Dr. Pavita Pananon, Associate Professor of International Business at Thammasat Business School, Thammasat University, and who has done extensive work on both corporate Thailand, outward investment, inward investment, and everything in between. Brilliant research and very articulate. And finally, but not least, Dr. Kirita Balpichit, who is Director for TDRI Economic Intelligence Service at the Thailand Development Research Institute, and was previously with the World Bank. And we'll give her take. I think all these experts balance each other out really well. And we are going to kick off with Birgit, who must leave at 8 p.m. So don't be surprised if she sneaks away off the stage. We won't make an announcement, but it's not because she's getting bored or is giving up in disgust. So over to you, Birgit, please.
Okay. Well, good evening, ladies and gentlemen, and Happy New Year. I hope our economist panel has some good news, though I have to say globally it looks a bit shaky. I was asked to quickly go over the global, spend some time on the regional outlook, and then focus in on Thailand. So I will do my best and do it very quickly. I do not have a PowerPoint, so you have to trust and listen to me. But you can find anything I say online. What the World Bank produces is a public good, so everything I say has publications behind it. And specifically on the global trend, it's the Global Economic Prospects Report, the JEP, and we just published one in January, a few weeks ago, so you can look and check the numbers for global there, and for the region as well. And for Thailand, we have the Thailand Economic Monitor that we just launched also last week, and it's also online, and you can check any detailed numbers there. So what I try to do is give a bit the broad picture, starting from the bird's eye view coming down to Thailand. What we see for this year, to start with the good news, is that we hope we have higher growth globally than last year. That's only a half good message because last year was the weakest growth we recorded since the global economic crisis of 2.4% globally. So we hope this year we get to 2.5. So a little bit more, but nevertheless, let's hope for it. And it is actually quite ambitious to get to this number given all the global trends that are ongoing, and you will hear perhaps more reflection on that from my other panelists. But I just wanted to remind you, last year in 2019 we had to downgrade almost half of all emerging and developing country economies in their growth forecast. So this was really not a good year last year. And you know it was very much related to uncertainty, what the topic of our discussion is. And it seems like some of this uncertainty will carry through this year. And if we talk about a recovery, even if it's a slight and modest recovery, it is really reliant on a recovery in a few large economies that emerge from recessions or sharp slowdowns. And if anything goes wrong in these economies, we will not get to the 2.5%. So this was the good message. But perhaps for the region, the message is also not as bad. Here we project an easing to 5.7%. And that is really related due to the moderation of growth in China, where we expect it to remain under 6% at 5.9% this year. Excluding China, China is of course driving the forecast for the region a lot. We do see a recovery to 4.9% coming. And this is not just because we hope some of our economies, which are very export-oriented, including Thailand, will get some leeway from the increased certainty of trade after the first trade deal was signed. But we see actually also domestically that in some of the countries there is a strengthening, like in Cambodia, the Philippines, Thailand, and Vietnam. We see robust capital flows, low inflation, and good financial conditions. And what we all hope for in several of our countries is larger public infrastructure investment. And Thailand is definitely one of them, where our forecast will hinge a lot on that. There are two big global trends that still give us all a headache at the World Bank. One is an unprecedented debt accumulation over the last decade, which is really dampening the growth prospects, perhaps not for Thailand, but several neighboring countries, which reached the threshold of what they can legally borrow in terms of public debt. And the second major global challenge we see is the continued and dramatic productivity growth slowdown. And that's true for Thailand as well. And if you have time to read the Thailand Economic Monitor, there's a special focus topic just focusing on productivity trends in Thailand, why it is decreasing, and what could be policy recommendations to get back on track. I think for Thailand, to switch to the topic of interest perhaps of most of you, we do see that in the end of 2019, the story of the growth slowdown was not just for Thailand due to external demand slowdown. So it was not just that exports were not growing as fast, they actually shrank. But it was really now filtering through into domestic demand. So we see much more subdued private investment, which makes sense. If companies don't see the external demand for their goods, they are not really happy to invest. So private investments were not growing as we hoped for. But what you all perhaps also know is public investment did not grow as fast as everybody hoped for, and did not get off the ground, even though we had a government in place for the second half of the year. And also private household consumption was not as strong. And that's also related very much to uncertainty. If households feel there is a lot of noise globally or regionally going on, they just spend less. And we could see that in the numbers. I want to reflect on the policy response of the government. In our view, the government responded swiftly, and it was, in our view, a good first fiscal stimulus program. Unfortunately, it had until now very limited impact. And I think it's really not so much related to an issue or problem of a design of the program, but really an issue if you look at the broader picture. We had a fiscal stimulus program, but expenditure did not increase much. So that's a problem. So usually your expenditures are moving slightly up, and especially you have a fiscal stimulus. So the issue is really, yes, there was a stimulus, but everything else didn't get off in the budget, right? And that is, of course, why we don't see that much impact by the government spending and the fiscal impact in terms of increasing private consumption and supporting it. We don't see any fault with central bank policy, but I think it is also a limited space they have, what they can do when interest rates are already very low. And of course, if you look at the Thai baht, there is a lot going on that central bank can simply not influence. And that is related, if you look at the trade balance, we saw a dramatic decrease in imports, not just exports, which is generally a good thing for the trade balance, but it also means that the Thai baht simply will appreciate, because if you had more imports, you would naturally have a depreciation. And this is what everybody hoped for. If the big infrastructure projects come online, then a lot of capital goods and intermediary goods would be imported, and that would help to weaken the baht a bit. So that didn't happen, and that's why you also see that trend of the increasing baht. But there's nothing to blame on central bank policy on that. There's really nothing that BOT can do about it. I want to finish with a more broader, medium, longer term perspective. And I just want to say a few sentences about what keeps up really up at night at the World Bank. And this is always the longer term story. And the question is growth inclusive. And here we do see some worrying trends. You perhaps saw the official poverty numbers that were published at the end of 2019, for 2018, and they do not look good. And we observed already since 2015 a slight uptick in the poverty numbers, but the 2018 number really doesn't look good. So what you will see is you have now a country, an upper middle income country, where poverty increased since 2015 by 2%. 2%, that's a lot. Okay, and there is no reason why that should be. We didn't have a global crisis. We didn't have a specific crisis in Thailand in the last 4 or 5 years. So it's a real conundrum that we all economists and I think also citizens of Thailand have to get their head around. First of all, of course, government itself. So this is something I would leave with you to ponder about. We will have a poverty report published within a month that goes and digs much more deeper what is happening in terms of poverty trends. I can give you some glimpses. For instance, the southern Thailand provinces became officially the most poorest provinces. So not anymore the northeast. It is now definitely the south. We saw an increase in poverty across all provinces, all regions and provinces. So a lot to think about. The second main thought that I want to keep with you that is more medium, longer term is on productivity growth. So productivity growth is really essential for growth in any country, but particularly tricky in an upper middle income country that wants to reach a high income status. And when we estimate how much growth it would take for Thailand to become high income country according to the 20-year strategy, which is in 2036-37, right, ending, it would need to grow 5% annually from now to then. We have growth of 2.45%, right? 2.5% last year, 2.7% predicted this year, and 2.8% next year. So if that's going to be the trend, then around 3%, Thailand will not be high income until 2050, not to speak about 2036. So when we put numbers into the model to see what would it take to get to high income by 2037, it would mean not just 5% growth per year, but it would also mean a doubling of public and private investment, so to 40%. At the moment, we have around 20%. That is a tremendous challenge, right? And it would need to have total factor productivity increases yearly by 3%, which is similar to Korea in its heydays of growth. So it's a real double challenge for an upper middle income country to have both factor accumulation, which is private and public investment growth, and to have a capital accumulation, and to have TFP growth, which is mainly related to innovation, higher education, so very different sources. So one is really create infrastructure, accumulate capital, right? And one is really create soft skills, create innovation, research environment. And that's a real big challenge. So I finish on that. I think I listed all good and bad news that I'm aware of. Over to you, Gwen.
Thanks. Thanks very much. Thank you very much, Birgit, for a rather sobering take. We will come back to that, particularly, I think, the poverty question, perhaps inequality, productivity. But we'll move on now to Dr. Bandit. You okay with that? Oh, you've got the... Do you have a control? Do you want to...
He has a special one.
Oh, good.
Thank you, Gwen. Well, just let me introduce myself again. This is my new job title now. The chairman of the Foundation for Public Policies and Good Governance in Bangkok. Good evening. I think only 2 weeks ago, the world started the year 2020 on a very positive note. You know, the phase one of the trade agreement between the US and China signed. The December macro data from the US looked very respectable. And also at Davos, if you remember, President Trump really went out of his way to confirm that the US economy is strong. And so financial market reacted very positively, to this news, both in the equity markets and also in the bond market. To the extent that many felt that market participants were a bit more optimistic, given the weak fundamentals and uncertainties that we have in the global economy today. And then came last week with the virus that spoiled the party. But it reminds us that the world is full of uncertainty and anything could happen. And it reminds us again that our lives wasn't meant to be easy, to paraphrase the famous ex-Australian Prime Minister. Now let me just add on 2 points on this panel. First, on the title itself, the economics of uncertainty. And then to look at the challenge faces Thailand this year. I think the dynamics underlying the global economy today is best described as the interaction between the three centrifugal forces that are shaping the global economy. The first one is the cyclical forces, the ups and downs of the business cycle, of which the global economy is at the moment is on a downturn, with a synchronized slowdown due to the effect of the trade tension between the US and China, and also due to the uncertainty associated with the future of the global trading system that pull back private investment. The next one is the force of a circular decline in long-term potential growth of the world, brought on by slow productivity growth. Agree with the World Bank, definitely. Also aging society and also climate crisis. All these trends, I think, show that the technological improvement that we have seen in the last 5 or 6 years or so have not been able to lift or promote a better longer-term prospect in the economy, which is something I found quite disappointing and surprising. And the last one, of course, is the global power shift that is redefining the structures of global power from the so-called unipolar model based on the US into a multiple polar model with a number of new power centers emerging. A case in point, of course, is China. Now, from this last point, I see 2 implications that are very clear for the global economy. The first one is less stability and more uncertainty linked to more geopolitical tensions. And the second one, which is more important for me, is that the capacities of the global economy to collaborate and to act decisively on the common issues, even on issues like the existential issues like climate change, will be much weaker than before. So for me, this is the global economy that we live in. And the recent episode of the virus add on another complication, which are unhelpful both to the region of Asia and also to Thailand. Now let me turn to my points on the Thai economy. Let me start by saying that I agree with what the World Bank said, okay? Our challenges at this time are many. The challenges for Thailand at this time are many, but the capacities to address these challenges effectively may not be up to par. If so, we may risk another poor year in terms of opportunities and growth. First, the economy is over-reliant on the external sector, making it very difficult for the economy to adjust to shocks. This year, the outlook for both export and tourism are not bright. The global economy is on a downturn, and the effect of the virus on the global tourism industry will be quite significant, and this will negatively will impact the economy. Given that it is an important source of earning for Thailand, as well as the large presence of the Chinese tourists in our inbound tourist industry. Second, our domestic demand. The fact here is that our domestic engines for growth are not firing, okay? Private consumption is handicapped by slow income growth and also high household indebtedness. The private sector's investment is weak, and the business confidence is also not strong. The government spending has shown to be impactful, but only at the margin. And notwithstanding the current uncertainty regarding the budget this year that is now in motion. So for me, I see the economy is still being caught in what I call a low growth environment, with continuing challenges in the context of corruption, in the context of governance, and in the context of income inequalities. I think Bridget mentioned about rising poverty in Thailand. For me, as an economist, it's hard to believe. We believe that growth will always lower poverty because average income is moving forward. But now, with growth moving forward, poverty is rising again. So it has to do something with income inequality getting worse, so that both ends of the curve is getting pressed. Okay. Now let's come back to the Thai economy at this time and ask ourselves what we can do, to meet the challenges. I think the economy has many good qualities. If we could leverage on that, I think the economy can do much better. But first and foremost for me is that the thinking and the configurations of policies must change. Policies do matter, and good policies can make a difference. To this end, I think public policy in Thailand must aim at addressing the issues that the country faces in order to improve the livelihood of the people and also the functioning of the economy. Improving productivity is a good start. So our policymakers today, I think, must seriously focus on fixing the problem and deal with the matters head on, rather than living with the problem and try to manage, the fallout from past policies and risk what I would call policies in irrelevance So the headline today is bulls and bears. Huh? So I think we have a challenge to do this year. And if we cannot improve on our policy configuration to address some of the underlying issues that are sort of limiting the ability of the economy to expand, then this year may be just more of the same. Last year you mentioned 2.7 growth, 2.5 growth. So this year it could be more of the same with nothing really changed. So that's my view. Let me stop here. Thank you so much.
Thank you very much, Dr. Bandit. We'll turn to Pavita, and then we might just turn to you very quickly after that, Birgit, for a comment on maybe a couple of points the speakers made, and then we'll let you go. So after Ajahn Pavita's talk, that is if you can... Actually, maybe while you're getting the presentation up, I could ask you, Birgit, to... I think, this theme is coming through very, very starkly at the moment, is, as you pointed out, and Dr. Bandit followed up, this issue of poverty has actually flummoxed people, and in fact, this all came from NESDB research last year and took a lot of people by surprise, I think, when we heard that, as you said, 2% increase in poverty since 2015, but actually I think that translates to there's been an acceleration in the last couple of years, and in fact I think we've now got nearly 1.8 million people more added under the poverty line. Some people say there was a slight recalculation of the way this is configured, and we've got a poverty line of just under 3,000 baht a month. So we're talking about people who are living off under 3,000 baht a month. You say it's a conundrum, but you clearly, having just gone through, and I would recommend the World Bank Economic Monitor report for Thailand, which Birgit mentioned, which is excellent in January and does contain some hard-hitting insight. So you must have some ideas of what is fueling this. Is it more is it a policy paralysis, inability to act to address these things, or is it things that are, external things beyond the government's control? Do you think it's a mix of both? And what is to be done about it? Sorry, that's a quick...
It's a long list of questions.
Oh, sorry, you don't have to... No, just you get the impression.
No, and I'm really apologizing in advance. It's not that I need to just go home and drink a glass of wine. I still have my night shift. My headquarters is in DC, and it's just very demanding. Sorry. So I really apologize in advance, and thank you, Gwen, for being so nice to accepting that. I think just quickly, because I don't want to take time away from the other speakers, but ultimately we agree on everything what my friend to my right said. Of course, the key thing that drives poverty reduction is growth in wages, because the main source of income for households is salaries and wages. And if you do not have an increase in productivity, firms cannot pay, so output per worker, firms cannot pay higher wages. And then you will have poverty increase, or you don't have an increase in growth and consumption. So what we see in essence is a result of many of the trends that we refer to in different areas. So what we see is that in Thailand, the jobs that are newly created are not perhaps paying much better than the jobs of the past, and that we don't see investments into increasing productivity, because it needs some investment from firms to get higher output per worker. And if that doesn't happen, you cannot increase productivity, you cannot increase wages. It's as simple as that. So there can be many policies that could enhance the likelihood of investments, of private investments. And it is always the tricky part to identify exactly the policy that could perhaps mostly impact it. But frankly, from our perspective and my personal views, it is a lot a question of competition. Nobody is innovating and investing in new ways to produce unless they have to. That's just how it is in a market economy. And because it creates a lot of effort to do innovation, to come up with new products and how to produce services or goods in a better way. And if you don't have an environment where firms have the pressure to be innovative and to invest, it is less likely to happen. And that's what you see reflected in the results of the productivity analysis, which is focused on the manufacturing sector. But you can see that firms that are exporting and that have FDI content are much more productive than any other firm. And that perhaps the entry into markets is quite healthy and more productive firms enter the markets. But I have at the same time more productive firms are exiting. And if I see that in an economy, I understand that the normal cycle of business cycle of and cleansing cycle of the bad firms and the non-productive firms dying off after a while is not working, because the good firms are exiting, because they can't compete with some of the big guys or the incumbent firms that are in the market. And that's a competition question, right? The playing field is just perhaps not the same for everybody. So I leave it at that. Thank you.
Thank you very much. And if you'd like to make a discreet exit when you need to, that is fine. And we'll thank you very much for coming tonight. And over to Dr. Pavita. And I think some of these themes we've just raised are also, you've done some excellent work on value chain, which is all part of productivity and innovation. But anyway, I'll leave it to you.
Thank you, Gwen, and thank you for the introduction. And I try to finish before you have to leave, because you would kill my confidence if you walk out in the middle of my talk. So
no, she has to. She
I know,
on pain of.
But anyway, I'm asked to be here among the leading economists of Thailand. So that's already killing the confidence, But I'm asked to take a more firm perspective in looking at what we are coping in Thailand. So I try hard to think of how I would want to address all these things. And I tilted the title of the Gwen's the main title of the panel a little bit. And I call it Economic Uncertainty in Southeast Asia. And my theme for you today is that out of sync, but not quite out of sight just yet. And I know that, I shouldn't be using PowerPoint because this is a more casual discussion and all that. And I know that Dr. Titinan here is not big fan of using PowerPoint because then you wouldn't listen. But I just thought that if I don't have PowerPoint, being professor, I don't remember what I have to say. So excuse me for using PowerPoint just to remind myself, okay? But I have three main part of my talk. First, I want to address why we are getting out of sync. And second part would be why Southeast Asia is not yet out of sight. And then the third question would be the main one, which is so what for Thailand, for Thai firms and everyone. And that would be the overall. So why out of sync? I think we already addressed, Dr. Bandit and also Brigitte has already addressed that, the world is not the same. And I think that if we are looking at the Thai economy, we have been an economy that did well from the 70s onward to about 2000. And that's under the globalization as we know it. And that globalization is, we all know that it's the liberalization of all economies, the kind of environment that allows firms, multinational firms from developed economies to disaggregate their activities into the kind of the global value chain, or you might call it supply chain, and relocating some of the part that they don't want to do in their countries, which normally are the basic manufacturing, and you relocate those to developing economies. Became a trigger for the economic development in developing countries because they welcome foreign direct investment. With that come technology and all that. But this is not no longer the case that we are seeing globalization. It's not only because of Trump, but it's also because, the changing nature of globalization that we are seeing. First of all, I will show you later the evidence that the global value chain that we know it is less driven by trade in goods, but it's being driven more by trade in services. And if countries do not catch that trend, it will be stuck in the kind of the lower value added end of the value chain. And I think the second point that I would like to point out is that the benefit of labor cost arbitrage for firms is becoming less important. So although Vietnam is still cheaper, China is still the cheapest location, but for firms to think about locating in some countries further away that they might not be always able to control their supply chain network is posing some risk to the firms themselves. And technology is also helping some firms to think about relocating or reshoring back near their consumer demands in the developed economies. And another point that is changing the kind of the globalization as we know it is also that the changing geography of demand. We used to see the world as from Asia. It used to be that made here, sold there, there meaning the US, the EU, and Japan. But more and more, Asia is becoming a region of its own. And I call it, we are moving more from factory Asia to market Asia. Because from, made here, sold there, is becoming made here, sold here. Also in the area, this area here. So that's, I think, the three key points on why globalization is changing by itself. And that's affecting the nature of trade and the growth of trade that I will show later. And not just that, and we're also seeing the rising challenges to global value chain structure. First of all, of course, there is the political risk that we are seeing, the rise of nationalism, protectionism. So we see Trump, we see Brexit, we see the problem between US and China, and now Japan and Korea are also having some issues that makes the firms that have factories and subsidiaries in those two countries have to think twice about how to operate their network of subsidiaries. Second, we also have the technological challenge to the global value chain. With the more automation, Internet of Things, there is less need to be really globally divided and globally segregated along the global value chain. Many firms are able to use the Internet of Things to sort of shorten their supply chain. And what we are seeing in the world today is actually supply chain are becoming more shortened, closer to consumers, because what firms want is agility and adaptability to meet the changing requirement of consumers. And another point that also adds to that trends is the concern for environmental and social concerns that are making firms think twice about how to manage their supply chain network. Think of the flood in Thailand that disrupt the supply chain of hard disk production. After that, firms tend to think that it's too risky to just concentrate the manufacturing of hard disk drive in one particular area that is subject to flood with no policy to address, basically, for a long time. And we're also seeing that some issues such as responsibility in supply chain is becoming a major issue for big multinational firms. Think about Thai Union, the Thai firm that sells seafood. If they cannot tell where their fish or where their shrimps come from, it hurts their sales in markets that are full of consumers who pay attention to those issues. So these issues also give challenge to the kind of the global value chain that Thailand and Southeast Asia used to fit in very comfortably. If you look at this graph, you would see that the growth of the trade in goods over the past 2007 to 2017, that's the past decade, is actually less than the growth in services. And if you look at what kind of services that is growing so fast in the world, Thailand, we seem to pay most attention to tourism. But in fact, it's the telecom and the IT and the business services and the IP changes that are actually driving the growth in services. And countries that are focusing on those are countries such as India or China is doing very well in that, whereas Thailand is focusing more on tourism, and if I may say, it's also the low end of the tourism, where we put a lot of labor to take care of people, but we're not thinking much about using technology with tourism. If you look at this, is another graph that shows you why countries like Thailand, who have long depended on the export of items like computer, transport equipment, auto parts, and machinery, we're not doing so well. If you look at this is the blue is represent the growth rate of export between the year 2000 to 2007, and the black is from the last decade, 2007 to 2017. You can see that all this manufacturing value chain is actually having the kind of the saturation of global demand in those. And the firms that have already located all around the world have already done so. And that's why the company trade is slowing down. And that shows in the slowdown of this particular sector. And if you look at the cost difference between countries, you can see I highlight Japan and China. And if you take the US as 100, the 100 benchmark here, you can see that the blue is 2004 and the red is 2018. The cost in China has actually moving very near to the cost of the US, whereas the cost in Japan is also being reduced nearer to the US thanks to technology and all those automation and things. So for firms and for multinational, there are less needs to really look for countries with low cost, except they are in the sector that they need to do that, such as textile or automotive. So, and this graph also shows you that what is happening in Asia is that Asia is becoming a market in itself. If you look at this left hand shows the percentage of consumers in developed Asian economies. Developed economies, advanced economies, and the right-hand side shows the consumption demand of consumers in emerging economies. What you see here clearly is that the growth in consumer demand is growing in the emerging market, particularly projected by 2030. That's where Asia is dominating. And that leads to my second point on why we are not so quite out of sight, and that's because of the potential of the demand that is shaping up in the region of Asia. And what that do is that it's leading to regional supply chain emerging in Asia as through intra-regional trade and investment. You might be surprised because when you think of Southeast Asia as ASEAN countries, we used to be the countries that trade more with outsider, the US, the EU. But right now, the area that is the number one destination for trade for ASEAN is actually ASEAN itself. And investment is also rising up for Thailand. Just take Thailand, for example. Over the past 17 years from 12 years from 2006 to 2018, the amount of outward foreign direct investment from Thailand grew 15 times. So what we are seeing here is that firms within this region are actually investing in the region to create their own regional value chain, confirming my point that it's not just made here, sold there, but it's also made here, sold here. And what that means is that what firms and countries need to do is to look for complementarity within Asia. If China is relocating, is it relocating their labor-intensive activities, or are they relocating their R&D? And which country would benefit from China relocating the labor-intensive activities? It's not the same country of China relocating the R&D activities. How do government and firms understand this complementarity? And Southeast Asia is actually a part of this, and that's why I think the the kind of, I agree with my panelists that things are not looking so rosy, but at least we are in the region where the economic dynamism is really growing fast. This graph shows how things change in 17 years compared within Asia and compared to the world. You can see that for global trade, overall, within the period of 17 years, the amount of global trade grew 2.8%, whereas in Asia alone, it grew 4%, 4 times, not 4%, but 4 times. Again, for investment, you can also see this is the intra-regional investment that you see. Asia is again the one that is the most actively investing within the region. This graph is just an example. Now Birgit would have to go, so I know that I would have to finish my talk soon. But nice seeing you, and I agree with all that you said. Thank you.
Rita, carry on.
Yes, I carry on. So what I want to show you here is that when you look at investment, government tend to look at investment as a big aggregate number without really looking into the different kind of sectors. What this shows is that yes, China is a major investor in some areas, but ASEAN might be also competitive in other areas, like the one that the light blue is showing clear here is where ASEAN is becoming is more dominant compared to China. So it comes to my last slide on the so what. So I think what we need to understand now, particularly on the economic policy with regard to international economic relationship, is that we have to reassess where country and firms compete in global value chain. We cannot just be talking about all manufacturing. We have to be looking at where countries is best at doing what. For example, Thailand has already gone beyond its competitiveness of being the labor-intensive production for activities like automotive and electrical. So why bother competing with Vietnam on that? Thailand should actually be thinking of what they can do better in the value chain of the electronics and the automotive. And we're not seeing that the government is talking about that. We're seeing the government looking at Vietnam and thinking of what we need to do and coming up with more tax incentive that is just going to raise to the bottom. And we have to think more of what we do, not what we sell. And what I mean by what we do is what we are actually good at. For example, Southeast Asia is an area that has strong potential for mainland Southeast Asia. Thailand is no longer the place to be the sheep producer. What we can do is we can act as gateway to this mainland Southeast Asia. The activities that we need are logistic, distribution center and all that. If the government is not thinking about how to unlock the bottlenecks of these activities, we're not going to attract companies to relocate to Thailand, no matter if the EEC has high-speed train that rivals the Shinkansen in Japan or what, but that's not what we are supposed to be doing. So I think I agree with Brigitte and Dr. Bandit that yes, competitiveness in the near future needs to derive more from productivity of the country and of the firm, as well as connectivity. How do countries that try to attract inward foreign direct investment make the firm feel that investing there allows them to improve their connectivity and their ability to benefit from regional complementarity? And I think that takes a lot of institutional capability and capacity to deliver not just quantity of growth, but also quality of growth. And that's where perhaps Thailand is not the one that shows the most and the strongest potential in having the institutional capacity. We still have a lot of issues that would be the one that worries investor. Rules, the same rules do not apply, and competition, as Birgit has mentioned, and all those things would be something that I think would make Thailand still a country that we should be worried when the potential for Southeast Asia is strong. If we don't move forward, we fall backward because everyone else is moving forward. And I hate to end in a negative note, but at least we are in Southeast Asia. And that's why you are here too in Southeast Asia. And I think Dr. Girida would have more rosy issues to tell you. Okay.
Thank you. Excellent. Thank you for a very thought-provoking presentation, Pavita. Before we move on to Dr. Kirida, though, I'd like to ask, so you have, broadly, I think you're rather pessimistic, but it wasn't actually clear because you were pointing out also some of the strengths, not just in Southeast Asia, but in Thailand, and your overall point is they're not leveraging enough and not thinking creatively enough. Are you completely pessimistic, or where do you stand amongst are you more of a bull or a bear on Thailand's ability to actually get its act together in the way you...
You know, what I worry is that all these things, the firms understand. And the Thai firms who understand this are not here to invest in Thailand. They're here they have already gone regional and they have already gone overseas because they want to create their regional value chains and all that. What I worry is that if the government would get it, because if the government would get it, then they would have to find ways to facilitate all these different things, because the industrial policy should not be a one-size-fits-all. So, and understanding that global value chain is actually the kind of mechanism that drive economic activities forward. I think it's not being discussed much, and that I worry. So I worry about the institutional capacity of the Thai government to really make Thailand benefit from its potential. And I think what would happen is that whoever can do better, they would do. And that would also enhance the problem of growth inclusiveness and the kind of the big firms getting bigger and bigger.
Right.
Yes.
So I think that makes you a bullish bear or a bearish bull. Anyway.
I'm in the business school, so I have to see how Thai business do. And then if things are good for them, it's good for them. But how do we make things that are good for firms also good for the home country? I think that's a key question.
Good, thank you. We'll return to a couple of your points later. And now over to Dr. Kirida, who's driven all the way from Ayutthaya to be with us tonight.
Thank you so much, Gwen, and good evening, everyone. It's always difficult to go last because, all our distinguished panelists have said most of the things that should have been said. But the good thing about going last is also that, I can add on, to some of the things that I think would be of interest to most of you and also maybe useful for you or your businesses as well. So let me sort of really get to the nuts and bolts and also try to tell you what does it all mean when we say that, look, the global economy is growing, but it's growing at a slow pace, right? The big countries, as Birgit says, are still growing, but they're growing slower. Actually, I have the numbers that Birgit has actually, talked about, which is the World Bank's most recent forecast, which is, by the way, before the Wuhan or the coronavirus. So before the coronavirus, earlier this year, right, the World Bank had forecasted that this year the world would grow by 2.5%. About the same as last year. Last year it grew by 2.4%. But the interesting thing is when you disaggregate, the World Bank's numbers into advanced economies versus developing economies, the growth is actually driven by the developing and emerging markets. So that's where the growth is coming from this year, which is why people are so worried, I guess, that the developed countries, the big economies, the USA, the Euro area, the China, the Japan, they're still, growing slower than last year, right? Like for the US, for example, it grew by 2.3% last year, its economy. This year, it will grow by only 1.8, right? So Europe, the same thing, a bit of slowdown. Japan, slowdown. China, slowdown. With the first time, China will grow less than 6%. And of course, with the Wuhan virus, right, these numbers will probably need to be lowered even more, right? So China will not grow by 5.9% this year, right? It might grow by 5.7 or who knows. So, okay, I need to get closer, sorry. So, So this is a worry, I think, for the economy, the global economy this year as well, because there's so many uncertainties, right? As Dr. Bandit mentioned, not only coming from President Trump, but also coming, from unpredictable, things like viruses as well. So if you look at this map of the world, it seems like the world is trotting along. There's it's growing. I mean, it's not contracting, but it's not good news as if it's going to grow by 4 or 5%. No, it's going to trot along at a low rate. So what does this actually mean, for all of us, for businesses as well? Well, one thing it definitely would mean when the U.S. economy slows down, meaning it's going to grow but at a slower rate, is that interest rates will be kept low. So interest rates in the world is now on a downtrend. You don't expect interest rates to go up anytime soon. Last year, the U.S. Fed reduced its policy rates 3 times, right? 0.25% each time, so a total of 0.75% in just 1 year, a reduction. This year is forecasted to maybe reduce it by another 0.25%, one more time, if the economy slows down by more than what the Fed expects, which is close to this 2% number. So what does that mean for Thailand, right? In Thailand, we look at a few things, right? When the Monetary Policy Committee meets, they look at a few things. They also look at the U.S. Interest rate as well. In addition to how our economy is doing, right? How our exchange rate is doing, they also look at the U.S. Interest rate. So this year, it's likely that the Monetary Policy Committee will probably keep rates. Raising rates is not an option, and in this kind of environment, it may reduce policy rate by another 0.25% this year, right? If the Thai economy doesn't do as well as it expects, the BOT expects the Thai economy to grow by 2.8% this year. But by the middle of the year, let's say if they see, oh no, it's not going to get to 2.8, it's probably going to be like 2.5, for example. They might consider lowering the policy rate one more time. So expect low interest rate environment here. Maybe it's good for businesses. The cost of borrowing is lower. Good for those who are in debt. They can pay a lower interest rate, or if people want to borrow, a mortgage and stuff. It might be good for them. But of course, the risk of a low interest rate environment is that they might be speculative activities, right? In like the property sector, or in other assets, right? In the stock market and things like that. That's always the search for yield risk is always there. So this is so one. I don't know if you say good news. I'll start with the bull. Is that interest rates will be low. Right? Interest rates will be low. The other news, maybe I'll start with the good news first, Gwen. The other good news is that because the global demand is growing slowly, oil prices will not rise, right? So when you look at the forecast for oil prices, we see that oil prices has been falling over the past 2-3 years, and this year again, if God forbid there's no war with the Middle East and between the U.S. and the Middle East or anything, then oil prices should be around $60 per barrel. This is Brent oil prices, which is around 5% below last year. So this is another good news for Thailand, because we're a net oil importer. Then we can buy oil at a cheaper price. But all this, okay, so I think I can only find two sets of good news, which is the global economy, or 3. One is the global economy is still growing. There's no crisis. 2, interest rates will be low. 3, oil prices will be low. Actually, I have a 4th one, which I have a graph, but I'll just talk about it, which is agriculture prices, rice, rubber, and sugar cane. When we look at the global, prices, forward prices, it's rising. So it's going to be better than last year, right? So agriculture prices, will be better than last year. So that's something of a good news as well. Well, I might have some other good news as I talk along, but let me talk about, I don't know if this is good news or not. Depends on which side of the table you're sitting. All right? If you're an importer, if you buy lots of or import lots of oil, you want the baht to be strong, right? So that you can buy oil cheaper in baht terms. But if you're an exporter, of course, you don't like the fact that, the baht is strong. So one of the things people always ask is, why is the baht so strong? And is it because, or is it only Thailand that's, strong? Or other Southeast Asian currencies are strong as well. And if you look at the Southeast Asian currencies last year, all of them have strengthened, right? All of them have strengthened, maybe except for Singapore, but all others have strengthened. So Thailand is not the only country whose currency has strengthened. But the special thing for Thailand is that we have strengthened more, by far more than other countries, right? So the baht has strengthened last year over 2018 by almost 8%, right? Well, right. So 2019 compared to 2018, the baht has strengthened by, almost 8%, right? Which is a higher depreciation, a higher appreciation compared to other countries. Why is that the reason? The reason when currencies appreciate is because there are lots of money inflowing into a country. So we look at the money that flows into Thailand, Philippines, Indonesia, and Malaysia, and the answer is quite clear that there has been more money in 2019. There's been more money, the blue line, right, flowing into Thailand compared to other major Southeast Asian countries. So, it's not surprising that the baht is stronger than other Southeast Asian currencies. So the next question is, where is all this money coming from, right, to Thailand? The interesting thing is that there's a lot of talk that the baht is strong because there's lots of money coming in from investors who want to just put their money in Thailand as Thailand's a safe haven, right? Which means that there must be a lot of money put into the bond market or the stock market. When we actually look at the sources of inflows into Thailand, we see that it's actually the blue bar, right? And what's the blue bar? The blue bar is current account surplus, which is essentially, the trade surplus plus the service surplus, right? So we have been exporting more than we import, basically, right, in both goods and services. So which is why the baht is so strong last year. Well, there's some money that comes into the stock market, the orange one and the yellow bar. The yellow bar is, by the way, the bond market. So there is some money, coming in, but some months, it's a net outflow. In months that the stock exchange or the bond market receives a lot of net inflows, of course the baht then strengthens even more, right? It then enhances the current account surplus as well, right? So it's not surprising that the baht is so strong because there's so much money coming from basically the current account. And here, don't get me wrong. When I say we export more than we import, right? It's not because we've grown our exports a lot last year. No, actually last year exports contracted, right, by 2.7% compared to the year before. But our imports have contracted even more, right? So which is why there's still net inflows coming into the country. So the big question is, so what's going to happen this year, right? What is the exchange rate going to be this year? Is it going to be much stronger? So here, I've actually, looked at the forecast that has come out by, various agencies and also various banks and international banks and also investment banks. And we have looked at them and taken an average, right? An average of all those, because I don't want to pick just one or the other bank, because different banks have different forecasts. And it seems that the average forecast for the Thai baht this year is around 30.3. So it's similar to the rate of the last quarter of last year. So it's not gonna strengthen by much more, but of course, if you look at the whole year, it's still going to appreciate, from last year, but it's not going to be an 8% appreciation like last year, right? It could be maybe 3 or 4%, but it's still a little appreciation. And actually, if you look into the future, the baht will hover around, about 30, to 31 baht. This is by the forecast of what I've told you about the average of many agencies and banks. So the baht will be, no more than 31 baht to the US dollar. So don't expect it to go back to 35, 36 baht. So that's where the forecast is at the moment. So we will still see a strong baht going forward. So if you are an exporter, you're not very happy about it. If you're an importer, you're probably happy. So what could we do, right? What could we do about this? I mean, as Alderman actually, at Birgit says that the Bank of Thailand has been doing many things now, right? It's been intervening. It has been issuing more, relaxed regulations so that money could flow out easier. Now you can buy a second home overseas, without, because usually in the past, the Bank of Thailand only allows Thais to buy one home overseas. Now it allows two, for example. And for businesses, you can take more money out for investments. So they've been doing all that, but the baht is still not getting any much weaker, right? Because there's still so much money flowing into our country, rather than flowing out. So what can we do? I think it's probably time for the government to do something as well, which is what we call the fiscal policy. I mean, if the government does invest and import capital goods, for example, right, that would be, taking money out of the country, right? So, if they invest in, mega infrastructure projects and buy capital goods, that's one way of doing that. So hopefully when the budget is passed, which is now again delayed, I was told that now the budget for 2020 will be implementable in June. So, in June we'll have that pot of money, and then by October we'll have the new fiscal year, which probably won't be delayed. So by that, by June the government should have more money to do new investments, and hopefully they will also consider investments which involves imports as well. So that's what it means. So let me just highlight the important economic variables that people are interested in usually when if you do business, which is well, first of all, I've already talked about interest rate, right, which will probably be kept constant, but there's a possibility of a one-time reduction of 0.25% maybe by the third quarter of this year if the Thai economy doesn't perform as well as the BOT expects. Now, inflation has to do a lot with oil prices, because oil is a big component of the Thai inflation basket. Well, as I mentioned, oil prices will actually fall this year, and if the baht appreciates as well, right? So translating that that oil price, that decreased oil price into baht, there will be even less. So we don't think inflation will be high. I mean, inflation in Thailand has always been quite low for the past many years. So this year, the Bank of Thailand expects the inflation to be 0.8%, right? Quite low. Last year was 0.7% or things like that. So it's going to be around this no more than 1%, right? But the big uncertainty here is, I guess, the capital inflows, which the current account will be in surplus. Will still be in surplus, but the uncertain part is whether there will be money, hot money coming in and out of Thailand in the capital market, meaning the stock market and the bond market. So that will always happen. If Mr. Trump tweets, one day, money will flow out. He tweets the other day, money flows in. So there'll be a lot of volatility in the capital, flows this year into Asia, into Thailand. So just have to buckle up for that. And of course, that affects exchange rates. Even though forecast says the average exchange rate for this year is 30.3 baht to the US dollar, but along the way there'll be a lot of bumps. So be prepared for that. So I think that's how I view what does the global economy means for Thailand. Maybe in the second round I can come and talk more about the Thai economy as I see. But I just want to leave to say that we don't expect a crisis in Thailand as well. So in this year, last year the Thai economy grew by 2.6%. Probably will end at 2.6. Maybe this year it could similar. It could be 2.5, 2.6. Initially, most economists had forecast a higher growth this year. So last year 2.6, this year 2.8. But I think with the Wuhan virus, which will dampen tourism, it will actually bring down, the number a bit. And I was just reading another article earlier today that the supply chain of electronics is also being disrupted because foreign companies producing electronic parts in China are now stopping production and taking their their employees home. So it disrupts the supply chain of electronics, and we import those parts to produce in Thailand. So that would also affect our exports as well.
Well, thank you, Dr. Kirita. I thought that was excellent, particularly the take on the Thai baht. And I think we've had a fantastic, actually, all four of you, actually neatly divided yourselves in different sectors. Nobody overlapped, actually, and we've had, I think, a brilliant snapshot. But I do think that before we open the floor up to questions, I would like to pick up on this point about the virus. We don't want to, at this point it's difficult to know how hysterical you get, how much we panic, how long it's going to go on. SARS, everyone panicked and it looked very serious for a little while, and then if you remember, it kind of just went away. And there were quite a few people who died, but I think given the fears at one point that it was going to be this global pandemic that was going to kill hundreds of thousands of people, 700 or whatever it was relatively small. This time I think the media has gone, quite crazy, quite rightly because it came from nowhere, but also the conspiracy theories that, there's a secret lab in Wuhan and it's all leaked out and, whatever. But people are very worried, as you said, this is going to have a huge, no matter what we find out about the full extent of the threat of the virus, the fact that big companies are already taking workers out. The US has announced yesterday it's flying all Americans out of Wuhan and closing the consulate. This is serious stuff. It takes a long time to turn it around. So even if in a month's time we find out that it's controllable and, not many people are going to die and it's not going to catch on all over the world, we still don't know right now, and there'll be some damage done over the next month. So I'm going to ask all of you an impossible question in a way, which is, I suppose, imagining the worst case scenario and the kind of containable scenario. Thailand is one of the front lines because of the number of, it is now so dependent on Chinese tourists. China is at the number one source of tourists, I think now, or possibly just behind something unexpected like Malaysians who come up and down across the border, so maybe that's a bit distorting. But anyway, so we've got Thailand very dependent on Chinese tourism, and we've also got the region very dependent on, production, factories, production in China and Greater China as well. And there is the possibility that, of flights. It's clear now that anyone coming from China has an issue, and Wuhan, forget it. Nobody's getting out of Wuhan. So anyway, given the variables, I wonder if you think this is a factor that Thai policymakers should really be taking seriously, and how much should we be thinking about the whole, epidemic or pandemic scenarios, if anyone has any thoughts on that. Yeah, well, no. You've mentioned it.
Sure. No, I definitely think and agree with you, Gwen, that even if it's contained within 2 months, and now the news is saying it should be contained within 2-3 months, but the damage has been done, right? People have been flowing out of China. Consumer confidence is down, right? So that in itself has already impacted the economy in the different sectors. So, as Gwen was asking, if it's contained within 2-3 months, the estimate, of just tourism in Thailand, which I've done a rough estimate, is that Chinese tourists are, just to give you some numbers first, right? Out of the 38 million, tourists that come to Thailand, a quarter of them are Chinese, right? So around 13, around a quarter, or actually a third of them are Chinese. Well, almost 13 million out of 38. If it's contained in 2 months, right? Which means that the number of tourists from China maybe will be reduced by half in each month. So that's like 1 month of Chinese tourists gone, right? So, that maybe translates into about, a 2% decline in the total number of tourists, right? So we had actually forecasted tourism this year to expand by 4%, given the rebound in Chinese tourists, from the first half of last year. So we were actually happy to see the numbers of Chinese tourists go up since July of last year, and it's continuing. And it's so unfortunate that now the trend has been reversed. So from a +4 tourism growth, it could be down to like minus 1 or 2. So that has an impact for this year, right? For this year. So that has an impact on the tourism sector in Thailand and for growth, for overall growth as well.
Interesting.
Yes, I agree that it would certainly hurt tourism. But if I want to take it from my point on supply chain and global value chain, I think this is another example of why companies would even be more focused on planning their supply chain strategies, that they might have to have several. So it's a China plus X kind of strategy being accelerated, not only because of the US-China tension, but also because of risk such as this that could disrupt their supply chain network. And with that, if you ask if that's a good or bad, I think it depends on how we can convince, again, back to the point of how countries and firms can benefit from this trend that firms are looking away from China. But when we talk about firms going out of China, I think one point that I would like to stress is that no one is going to leave China, because that's the major market there. So what we might be seeing is that companies are thinking of strategies that are dual, in the sense that perhaps the supply chain in China is more focused on serving Chinese market, whereas they are looking at alternative destination to serve the world or to serve other countries, and that could benefit Southeast Asia.
That's a very interesting view. Dr. Bandit, do you have thoughts?
Okay, just a quick thought. I think the key impact will be on China, with the incidence of the virus, and the channel of effect in China would be through disrupting the consumer behaviors in China, disrupting economic activities and business confidence, and also the tourism sector itself. Okay, and that would have definitely a big impact on the Chinese economy. But given the central role that the Chinese economy have in the region, I think the slowdown in China will have further implication for other economies through economic linkages, through the supply chains of production, and also through financial linkages. And so tourism is one area where we see, because of the mobilities of people, has been quite large. But in terms of businesses, I think these linkages will be disrupted, and that will be another dimension of the effect that eventually we will see more and more of it, and it's something that we have to take into account.
Are you talking about Thailand? As in
I think it's the region. It's the region. And if we are close to the Chinese in terms of our supply chain in electronics and whatever, that will be one of the examples.
Okay, thank you. I'd like to turn the floor over to questions, and I can see we already have one of our old-time members ready to ask a question. Please identify yourself.
Yeah, I'm Marwan Mark of the Nikkei Asian Review. I have just a question for Dr. Bandit and Dr. Kirida. So, Dr. Bandit, in your presentation, one of the weak points of the economy you flagged was government spending. And now with Dr. Kirida forecasting that money for this budget will finally probably be passed and enter the system in June, what kind of impact is that going to be in the months going ahead? Because government spending was a key driver of the government's policy. So is there a reason for panic in the Prime Minister's quarters?
I think it's a risk that the policy response might not be as speedy and as substantial as we expect due to the delay in the budget. But I think for this year there are many areas in which expenditure would be needed on top of the usual spending, because we can foresee many disruptions coming from linked to the climate crisis, the drought, the PM, the 2.5, and also the viruses. So this will demand extra expenditure from the government. So the key question would be the ability of the government to actually transfer money from other budgetary sources or spending into something that might need to be used more immediately to confront the issues. So I think in this sort of thing, it makes the ability to organize fiscal policy in response to the immediate needs would be much more demanding. But if you look at the way the government has been spending before, without all these immediate needs, my observation is that the impact in the context of trying to stimulate the economy has been quite small at the margin. Has been quite small at the margin. Yep.
Or we should just go to the second.
Yeah, I do think actually, well, after this question, I actually think that question also leads about budgets and how Parliament is functioning and the fact that we had a budget passed, but it was held up by the fact that two members had a fraudulent vote, even though the budget passed by many more than two people, right? It's just extraordinary, but that might raise more of an issue about economic management in this country, particularly since the elections, but maybe we can turn back to that in a while. We have a question up there. Please identify yourself.
My name's Ray Schonfeld. I'm a non-journalist member of the FCCT. The question is, what are the implications for the economy if the pressures for action on climate change become irresistible? That question is prompted not only by having spent the last month in Bangkok under a haze of smog. It's not difficult to foresee the pressures growing. The emergency action is being taken all over the world on things like automotive vehicle pollution, stopping the sale of petrol-driven cars, stopping cars driving in big cities. Those are happening. Here in the FCCT, we had a meeting about 4 months ago where there was the issue that was discussed was, what are the implications of Extinction Rebellion for Thailand? There was a panel, the United Nations were represented. The youngest member of that panel was 12 years old, talking about the implications for the world and for the younger generation. Surely there must be some pressures. I realize that a couple of the speakers have mentioned climate change as an issue, Dr. Bundit in particular, but it's not clear to me whether you think this is a serious factor in its influence on the economy or not. If you could comment on that, I'd be very grateful.
Over to you.
Thank you. I think the frequencies of the big impact coming from the drought, the floods, poor air qualities, and so on, are getting more and more serious in the context of the public. And hence, people expect that the government would be the first line of defense in trying to do something about it. And so the demand for better responses from the government, I think, is now much higher. As you can see from the newspaper, people beginning to complain and compare the policy experience against other countries. But I think the first and foremost is that we need to understand that this sort of thing is not just something that happened and the government can fix it. It's something that the Thai society has to be alert that it is a result of, of the way we behave. So getting the mindsets of the population, getting the understanding, and transmit that into a better understanding of the government in the context of the immediate planned action that need to be put in place, I think that become more important. I'm not so much worried about the resources that that we can assemble to address the issues, because even though we are in the low growth, low inflation, low interest rate environment, this is the wealth of this country is quite tremendous, and so it's a question of assemble the resources that we need through a concrete plan that get the understanding of the peoples involved, and then try to do something. But this has not been able to be executed in Thailand. So we keep saying this repeated, problems, and I'm sure that this year will be similar. Until that understanding came, I think things would change. So I think my view is that we need the situation to be the trigger point that call for change. But one thing is that a country like Thailand also cannot address a problem by itself, right? It is more of a global problem. And so, as I mentioned, that this shift of power from a unipolar model into a multipolar model would make a sort of global collaboration on these sort of issues will be even more difficult.
But does that mean the government should also be a little more savvy and responsive on these issues?
Definitely, because I think the public demand, expectation about this sort of thing now much stronger.
Yeah.
Because they can see how other governments, responding.
If I can add, I must say, I think the recent publicity, if I was an investor thinking about moving into Thailand, the publicity in recent months has been smog, and also previous before that was floods, and also the fact that Bangkok is sinking, which got a lot of publicity earlier this year, and I think that's exaggerated. It's not like you're going to build a factory and it sinks, but on the whole, we've got, pollution, sinking cities and uncontrollable flooding, which was the big story in 2011. So I do think Thailand still has a bit of an image problem, which could affect investor confidence. I don't know what any of you think.
I mean, definitely these things factor into the livability, of people, and also when firms decide to invest, they look at these things as well, right? The livability index as well. I was just looking at a number that was a research done by the World Bank about 5-6 years ago, which estimated the cost of air pollution in Thailand, which relates to the illness and deaths of people. And it was very interesting. So it says here, in the year 2013, the health cost was actually $63 billion US. I mean, that's like 2 trillion Thai baht. I mean,
that's based on what? Medical attention given to people with respiratory problems, or
of all kinds, and also deaths, right? So they have computed that if a person, dies prematurely, what would be the cost, the economic cost of that? So it's a pretty high cost for a country if this is not resolved.
Right. Thanks for that. Next question, and please identify yourself.
Hi, it's Oliver for Thailand Business News. I have a question for any of the panelists that would really help me greatly, because I must write a story about this, is why aren't there any big Thai global brands? Where are the Samsung? Where are the YA? Where are the Acer Aces in Thailand? Why aren't there any?
In fact, Thailand has some of the biggest in certain sectors, I think.
That's a big question that requires a lot of things. But if I am to,
give you like 4 minutes.
If I can say, well, we have some world leading firms, Thai firms that are number one in their sectors in the world. One is Thai Union, and the second is Indorama, is also the biggest. But if you are asking, in corporate Thailand, if you look at the pattern of growth, the Thai firms' development has been driven more by the unrelated and conglomerate diversification. That means whatever opportunities arise in the countries and firms jump into that. CP is a great example. From chicken, they have now get into high-speed rail. So with that kind of behavior, you are unlikely to spend much research and not much money on R&D, on innovation, on specific things, because you're not just competing in one specific sector. And I think that is one of the reasons, if you're looking at it from behavior of firms, that's why it prevents them from really being the leading of the world. If you look at the other companies that you name, those are the companies that invest heavily in R&D and improving their technological capabilities. And that would be my 4 minutes take on this. Yes.
Anybody else? Okay, thank you. Next question.
Yes, I'm Martin Mensky-Stalling. I work at Chiang Mai University in the Science and Technology Park on regional development and innovation, if you like. And I've been coming and going here for 20 years, but I live in Chiang Mai, so not all the time. My question is really about regional imbalances. I was shocked to hear today about the increase in inequality, but I haven't heard so much about the spatial regional imbalances between really the center, Bangkok, Eastern Seaboard, and the rest of the country, which to me seems to be like maybe one way of addressing some of the problems. For us in Chiang Mai, we actually had to kind of say, sorry, but yes, Bangkok finally is suffering from air pollution. Yeah, 150, what a joke, you softies, right? Because in Chiang Mai, we're suffering from 350 to 500 for months sometimes, AQI. Why is the high air pollution in Chiang Mai? It's ultimately inequality. The distribution of income to the farmers, they are squeezed, and so they're behaving in ways and things are happening in the value chains. So don't say, of course, say stop burning, but needs to be doing more than just telling them to stop burning. So it all comes to kind of regional imbalances and inequality down to the level, and maybe you can comment a little bit about that. I heard great things about the macro things, but there are so many microeconomic policy issues that maybe this is one of them you could address a bit more. Thank you.
Well, perhaps what you're talking about is the whole regional Thailand versus, you know, what everyone popularly looks at is Bangkok, Eastern Seaboard, you know, economic corridor, etc., and ignores the rest. Well, yes, so over to, this is a very, can be a long question, but it can also be a...
I think that was a comment.
He was asking for some comment about
how Thailand could improve the situation. Will you use the answer? Do you see anything happen? That's the question.
Well, I guess it would also be about, you know, the urban centre of Bangkok and the industrial development around this area and the Eastern Seaboard, etc., versus, you know, the north, the less developed regions. And that's drilling down. I mean, what we've been talking about is Thailand and in the context of the region and the world, but in fact, right now we're talking about, you know, the inequalities and the differences within.
Exactly. I think Kun Martin, you know, has a good point there that when we talk about inequality in Thailand, there are many dimensions. It's not only income inequality. There is inequality to the access of education, quality education, access to healthcare, access to clean air, you know, and also, you know, access to telecommunications or good transportation infrastructure, and also incomes, right? So inequality spans many dimensions, actually. And I've actually looked at the, if you look at the UNDP's Human Achievement Index, the HAI, which has, you know, these indices by region, it's very interesting to see that, you know, of all these dimensions, and, you know, of course, they're different for different regions. Actually, it goes by provinces as well. But if you aggregate the data into North, Northeast, South, Central, and Bangkok, it's very clear that in these dimensions, the region that is, you know, the most underprivileged, I would use that word, is the Northeast, right? And then followed by the North, South, Central, and then Bangkok. Bangkok is the best. Bangkok is the best. So, if you talk about, inequality spatially, and you need to address, one region and prioritize, that would be the Northeast. And you can look at different indicators and you'll be surprised to see that, for example, public expenditure per student in the Northeast is like 5 times less than that in Bangkok, right? Which shouldn't be, because Bangkok is more wealthy and people should be able to afford more to send, their children's school fees, for example. But that's
more private schools here. That way.
There's more private schools here, but here we're talking about the public schools. The public schools across the country, right? The expenditure, per student is much less in the Northeast, for example. So, that's in the inequality of quality education, or even just access to education. So I see that there needs to be a more prioritized way of resolving this issue, rather than let's address the whole country, right? And that would require a lot of resources and also the lack of focus, I guess.
Right. Thank you. That's a good answer, and I think we'll just leave it at that unless either of you have anything burning to say, because we have time for maybe 1 or 2 final questions. So over to you, sir.
Martin's question from Chiang Mai.
Sure.
I think the model of growth that we have had is, based on inputs and then high growth, but we have neglected the consequences of growth both on the environment and on the income inequality. But after successive long period of growth, the pressure on the resources have shown that the environment issues are key, and the income equality is getting worse. I think we have come to the point whereby these issues are now coming up and becoming in itself constraint to growth, which means that the model of growth that we used to have would now be unsustainable because of the problem imbalances that it creates, right? So we need the politics of the day, to understand this imbalance and try to find ways to reduce the imbalance through better quality growth and better distribution of the growth benefits, which we hope would come from people in the government that try to rebalance it.
Thank you. Okay, sir.
Good evening. My name is Leif Anderson. I'm member of FCCT. I have one question. We all know that the Thai baht has been appreciated quite a lot over a long time. What is the panel's expectations to future appreciation? And based on this question, what do you think will be the impact of some of the key main factors here in Thailand, such as agriculture, tourism, and the hospitality industry? Thank you.
You mean what would be the effect of a continuing appreciation of the Thai baht on those sectors?
Yes.
Right. Okay, because I think, Kirita, you kind of went into quite detail of the baht this year, but maybe in terms of the impact on these sectors.
Sure. So, as I said, it depends on which side of the table you're on. If you're an exporter, right, you will be heavily affected. And Thailand has a big export sector. I just came back from Honda factory in Rojana province in Ayutthaya, and the reason why they invited me there because they were so worried about the baht appreciation, and their management wanted to know if the baht would be further appreciated because Honda exports 50% of their production in Thailand overseas, and they're saying it's now more difficult to sell cars if they raise prices. If they don't convert it back into baht, they have a smaller margin. So auto industries, definitely, that's on top of their minds, right? Any industry that exports, right, and doesn't use a lot of imports as inputs, right, will be 100% affected by the baht's appreciation. Of course, you mentioned tourism, right? That also, makes it more expensive in the eyes of foreign tourists to come to Thailand. That would have some impact as well. And also, the fact that, as you mentioned, that if the baht is highly appreciated, then there could be I would say there could be more speculation on the baht. meaning there will be more inflows coming in, thinking that the baht will keep appreciating, so let's bring money and park it in Thailand, and that would even pressure the baht even more, right? So that's also another risk that could happen. So I think the impact is pretty wide, given that we depend a lot on export of goods and also on tourism.
So do we think that the baht appreciation has actually been a dampener on tourism? Because basically it means a $3,000 holiday last year, say you pay $3,000 for a little package, is now $3,800, maybe no, $3,300. $3,250. It's only, you think that's like a huge disincentive?
Well, it's as I mentioned, the baht appreciated by 8% last year, right? So, for tourists, high-end tourists, that might not, have a big impact on them. But maybe tourists.
You think it seriously puts some low-end tourists off? They'll go to Laos or something. So maybe this is good for the rest of the region. Who knows?
Yeah, I think so. The other impact that it actually has, I was going to mention, is also on the property sector, because the property sector has benefited from Chinese buyers over the past 2 years. The appreciation of the baht has also put off some of the Chinese buyers, because now their returns would be less, although the returns they get in buying a condominium in Bangkok is still higher than what they make if they bought a similar condominium in Shanghai or in Beijing. But of course, it's a lower returns for them versus them, maybe investing in Australia, right, or in other countries. So it also impacts the property sector indirectly as well.
Good point. Yes.
I think the baht appreciation is one of the favorite questions that I get, up until this year. And I wrote an article in a Thai newspaper about this. I think if you look at last year, the baht appreciated almost 8%, one of the best in the world. But this is surprising, when you take into account the fundamentals of the economy that we have and the problems that we have. So the question is why? I think the key reason is that the country has not been investing enough, both the public and the private sector. Because we have not been investing enough, we have not got a new platform for our export. So our export model is still based on the same commodity, same product. So we have not had a new product that can compete in international markets. So our competitiveness has been eroding as a result of lack of investment. But this lack of investment translated into increased domestic saving and high current account surplus. If you look at the graph that Dr. Karida presented, you can see that the blue line is everywhere. So we have been accumulating domestic saving because we have not been investing enough. And this is not just this year, it has been like this for many years. From 2017 to 2018, Thailand has a total surpluses in terms of the external current account, about 129 billion US dollar. That's the external surplus. If you translate it into the Thai baht, it would be something like 5.4 trillion baht. This is domestic saving. Just imagine if this 5.4 trillion baht had become investment, the country would have grown much better, and we would not have the problems of baht appreciation. So what I wrote in the article is that this appreciation of the baht, maybe it's just like, the economy is crying, calling for reform and restructure. So as to put Thailand into a higher growth path, instead of being caught in this, low investment, low growth, low inflation context. So right. just to add on the question on the Thai baht.
Thank you. And I think our final question. Sorry.
Can you
Excuse me.
not be more precise, particularly from the World Bank? What do you expect for this year or next year of the appreciation of the Thai bank
Sorry, I think we've talked about, you've had your question, and I think we've talked about it enough.
Sorry,
Could you let the other gentleman...
And what
sorry,
are
we're
the expectations?
cutting off now. Sorry, would you like to ask your question, sir?
Yes. Samurai club member.
Sorry about that.
I gather that there's a general feeling that there's a lack of innovation in the economy, and I'm wondering, is that then to write off Dr. Sumkit and the Eastern Economic Corridor, 2 new ports, airport, major freeway in place, another freeway coming, rail systems for moving freight and people. He is building an infrastructure for the future, the near future for that matter. Is this something that is not innovative? Is this something that is not creative? Is this something that's not going to work?
Thank you. And could you just identify yourself?
I'm sorry, what?
Sorry, what was your... Did you identify yourself? Are you
Yes, I did.
sorry.
Sam Wright.
Sorry, I missed that. Thank you.
I'd give you my phone number.
No, it's all right. Thanks, Sam. I'll keep that in mind. Sorry, I just didn't hear. Okay, so very good question there. I think, Pavita, it's up your alley.
I think what I got from your question is that if the investment in infrastructure is not considered as creative enough, I actually think that investment in infrastructure is much needed for Thailand because first, the logistic cost in the country is very high because of the lack of better infrastructure connectivity, such as rail and all that. So we definitely need that. And second, I think that it is a way to also distribute growth to cities that the transport network would reach. If you can see how things are with the BTS and the MRT, that's the sort of the development that is driven by infrastructural projects. So I think that it is needed, but I think the way that it is being implemented, how procurement is done, how firms are selected, and how much would the money be siphoned off would be something that we need to be concerned about the implementation of this necessary investment. Thank you.
Anyone else? Okay, I think, Dr. Bandit, no? Okay, I think on that... Okay, you want to... Okay, one more question, one final question. Please identify yourself.
Hi, I'm Tammy. Well, this is really tall. I'm Tammy, I'm from NHK. And this is going to be really short and sweet and really general. How do you foresee, the U.S.-China trade war playing out following the U.S. election?
Right. Okay.
Very general, very general.
So you mean, but vis-a-vis worldwide, or the fallout in Southeast Asia, or?
Region, yeah.
Well, that's a very big prediction. The future of the U.S.-China trade war after the U.S. election.
There's a lot of literature
variables,
and also analysis as well that has been done to say that even after the U.S. elections, the trade war will not end. Right? I mean, this trade war is not going to end easily. I mean, if Mr. Trump comes back, he's not going to end the trade war. If one of the Democrats' candidates come, they're not going to end the trade war, because if you look at what they believe in, they have a lot of fear in China as well. And this fear in China is inherent in most Americans, right? I mean, they fear of China's rise to world leader in technology, right? In world economy, in politics. So the fear of China is always there, and China is not stepping back on any of these things. So this is not going to end anytime soon. And actually, there was a survey done by Nikkei about September last year, asking 1,000 Japanese firms that has some business with China whether how long do they think? Do you remember how long do they think the trade war will last? Half of them, 500 firms, said more than 10 years. which is why they have already started shifting their supply chains and starting to adapt themselves. And this trade war is not only with the U.S. and China. The U.S. is now also in dispute with the EU, with India, with Japan. So it's actually expanding.
That's right. And another survey also by Nikkei found that like a massive number of Chinese firms were like actually also moving out of China as a result. But that's another, into largely this region.
Southeast Asia.
But anyway, I wonder if either of you have any thoughts or would like to make this a concluding remark.
I think Dr. Pavida would add some more, but let me just mention this. I think this is a long game, okay? So businesses thinking of what to do next. It's not just the trade war itself, but it's the uncertainty about the future of the multilateral trading system. So in Asia, I think one thing that we notice very clearly is that countries in Asia wanting to consolidate and strengthen intra-regional trade and investment as a protection against the weaker, global trading system. That's why you see the proportion of export and imports among ASEAN countries or ASEAN Plus 3 has increased tremendously. And I think the longer the trade war continue, it would give, a better reason for countries in Asia to build its own so-called, I would not say, regional trading platform, but to strengthen the intra-Asian trade system as a way of maintaining the momentums of open economy and liberal trading system. That's why when Dr. Pavida mentions about, made here, sell here, I think that one of the reflection that not only on the production front that things are moving together as a group, but the consumers also finding these sort of complementarities that about trading and exchanging goods among themselves. So I think this is a way that the region is responding to this pressure of the uncertainties at the global level. Maybe you want to add on. Yep.
Okay. Thank you for being the only lady who asked a question. So thank you for that representation from the audience. And I like your question because I think it brings out two things that we are seeing in overall. As Dr. Kirida said, it's not going to end if Trump's gone away. There would be another Trump who is looking at China as a big major threat to the what is that word? The hegemonic. Thank you. Hegemonic power of the U.S. So what I'm afraid is that with that kind of fear for China, we are seeing two things. We are seeing the China factor in a lot of trade and investment. Companies that come from China is raising fears and raising trust issues. Huawei in Canada is a good example. And you're seeing that companies, state-owned enterprise from China is not being welcome in the West and in the world. And what that might lead is actually a world where two countries are trying to have their own system and their own sort of network of countries. And that would be quite worrisome, because if you look at the Internet of Things, what that kind of economy is needed is the scale, where network scale is needed. But if we are to go into the world with two polar, as Dr. Bandit said, we're not just seeing the kind of the two technology system and platform, and we're also seeing the kind of the new competition that could be the next James Bond movie when women can play James Bond, perhaps. And I end at that. Thank you.
Thank you very much. So speaking about women and gender balance, I would also like to commend Dr. Bandit in particular for being on a panel surrounded by, luckily, Dr. Birgit left, but at one point he was just way outnumbered. He's only mildly outnumbered now. But thank you very much, all the panellists, particularly Dr. Bandit for being the thorn amongst the roses, or whatever you like to call it. And thank you, Dr. Pavida, Dr. Karida. And don't forget, if you are interested in the virus, I think Tuesday night promises to be very interesting, and lots of other things. So look at our website. Join if you are not a member. It's a real bargain. And I'll stop there. Thank you very much all for coming. Great questions.